The following presentation is brought to you as a courtesy from Forex Academy. This is part of our service, Live Beginner's Course. If you find it interesting and wish to be updated on new releases, please subscribe to our YouTube channel or join our community at forex.academy and receive all our services for free. Your like is also highly appreciated. Enjoy.
Hello, good morning, and welcome to the Live Beginners Trading course here. I am, of course, your host, Robert Blackwell, and welcome to Webinar 4 Practical Workshop. This is our first practical workshop lesson of the Beginners Trading course. So it's going to be a lot of fun. We can relax, guys. We've taken in a lot of knowledge over the last 3 days in terms of entering these markets, learning the structure of Japanese candlesticks, practical elements to trading such as volatility, what is leverage. We can actually sit back now and look at how the markets trade, more practical in terms of trying to combine all of this theory together to actually observe the markets. And this is effectively what we do as traders. This is what we're going to see today is the first glimpse of how traders look to get involved in these markets in terms of trading different asset classes, managing risks, looking for pip gains, looking for market exposure, and obviously looking for profit potential opportunities across different markets. So without any further ado, let us move into our very enjoyable practical workshop, lesson 1. And first of all, let us consult our disclaimer. There is, of course, risk inherent trading the financial markets. Now, of course, all of our live webinars are completely interactive. What I would like to just suggest, guys, is just to enjoy the workshop here. It's the first time most of us will see the MT4 trading platform provided by our preferred broker, JFX. Of course, we can see a whole list of fantastic markets to trade. Whether you want to trade equity markets or Forex pairs, you can see all the majors, all the minors, all the exotic pairs there, and that provides us with fantastic opportunities. So get involved in asking some questions. Even as a beginner here, we'll look to develop your practical skills here as a retail trader. Becoming familiar with retail trading platforms is, of course, the goal of this lesson. We want to make mistakes, guys, on a demo account, so to avoid the pitfalls, the beginner pitfalls when we enter these markets. So I would certainly encourage you guys to download a JFX demo account, get trading across the Forex markets, get involved, make some beginner mistakes, take too much risk, things like that, just to really get a level of, ascertain a level of consistency with this market in terms of avoiding those beginner pitfalls, becoming much more familiar with our MT4 trading platform, and learn to enjoy trading the financial markets. It's of course good fun in terms of understanding the news flow. Well, what is Theresa May going to say today in terms of her Brexit negotiations? How is that going to affect sterling? How can I make money? It's of course very enjoyable to get involved and learn what we're actually trading. So please, guys, ask questions throughout the webinar via the chat box there, and use make of the interactive webinar. So let's just consult the course overview. We are finishing off the first week of the beginners trading course. It has been very enjoyable so far. We've discussed the objectives of financial trading. What is all the fuss about? The essential knowledge. So what did we more specifically discuss? Well, first and foremost, we defined our role within the industry as a retail trader and what we look to trade. So different asset classes, the price of gold, the price of oil, a Forex pair, the German DAX, all of these different assets are great in terms of providing us with opportunity. What's all the fuss about? Well, we discussed, what is the Japanese candlestick? What does it tell us? It's simply the reaction of movement of price with buyers and sellers entering the markets. We look to precipitate and follow momentum, look for direction, and look and assess market sentiment. So this gives us an early signal to studying price action. The essential knowledge. So, well, what is it all about in terms of looking to enter a trade on an MT4 platform? How do we know what to trade? What is market analysis? Are we maybe looking to analyze technical markets? Are we looking to fundamentally ascertain value in trades? Are we rational consumers in terms of how we look at price action? And then we broke down some of the real elements, the practical elements to trading these markets on our MT4 trading platform. Of course, liquidity, volatility, and leverage. And then again, that's going to be a main construct of today's trading workshop lesson. So we're going to do all of this really practically on a range of different markets, placing some trades, getting involved, and looking to actually capture some movement in the markets just by studying what we've learned so far in the first 3 lessons. This is available to all of you guys, of course, to get involved on a demo account and try and get some trades off as well. So more specifically, well, the lesson outline, we will, of course, first log into the demo platform. We'll optimize the platform, look at market selection. We'll then discuss volatility, price charting, candlestick identification. We'll observe this liquidity, recognizing the spread, trading with leverage, and it will be all done practically again on our trading platform. So without any further ado, let us head forward to our JFX trading platform. So there we have it, guys. This is really what all the fuss is about. This is how we look to trade in the markets. It's quite exciting. I see some comments coming in already. I'm quite excited to get involved. So what I would say is, first of all, look for your JFX broker. Of course, you can download the platform. I would, of course, recommend them simply because, well, they're quite efficient in the amount of markets they offer, and as a trader you want to have a wide range of markets to trade. So we can see how many markets they have to trade here on the left hand side as we scroll down. So I'll go through them in a lot more detail. Of course, as well, I find particularly JFX are quite straightforward in terms of their transaction costs, simply the cost of spread here as well, with very small commissions. So of course, as a trader, we need to focus on our level of consistency that we want to perform in this markets over the long run. And it makes sense, of course, you know, when you're entering these markets, that you don't want to pay large transactional costs over the range of your trading career. So it is very important to find a broker that is quite cheap to trade with. So that's why we like JFX as well. And of course, then the volatility across different assets that we can see here on the left hand side, in terms of asset classes, not only Forex, but you want to be able to trade you know, commodities like copper, you know, oil. You want to be able to trade different equity indices both in the US and Europe as well. So we get great exposure as well with such a broker. So in terms of logging into the trading platform, once you download at your demo, you'll be provided with login details. Just simply go to log into trade account, and that will be your login detail there. So I'm already logged in here, so I can just click login. You have your own password, of course, and you'll simply log in, and you'll hear a sound just as heard there on the microphone. Here in the bottom right hand corner, that is effectively that sound we're hearing is a connectivity sound. So once you log in, you'll be presented with this. If you can just consult here, the bottom right hand corner, I'll draw an arrow on screen just to show you exactly what I'm referring to. Effectively, here is our connectivity. Once we have green bars here, green and red bars, and a level above, I would say 1 megabyte per second, we're fully connected to the markets. Okay, so isn't that exciting? We're now connected to real life price action, and we're actually able to trade all of these different assets. So that's simply how to log in and provide connectivity to your trading platform. Okay, so once we do that, then the first thing I would just like to go through is some of these asset classes, okay? Because many of us would like to trade only Forex markets. That's absolutely fine, you know, because there are plenty of them. There's so many different markets to trade. They are very, very cheap to trade. They move all the time. So if you're interested in trading volatility and gaining, you know, 20 pips or 200 pips a day across markets, whatever it may be, those markets are going to be great for getting involved in volatility. And they're, of course, one of my preferred markets or asset classes to trade. Let's just discuss some of these markets as well. Now, what you can do is observe your market watch. So 2 separate ways to do this. You can, of course, consult your market watch here on the left-hand side. Again, I'll just draw a large rectangle around our box here. This is our market watch here to the left-hand side, and it contains all of the markets we'd like to trade. Okay, so that's one way to do it. And of course, what you can actually do is right click on the Market Explorer and go to Show All. So that will just include all your markets. Again, if you'd like to simply insert a window, and I'll do this so we can observe what, because I actually have all my markets in front designated to my own style or my own properties of trading. And that's what we're going to do for the first part of this lesson, actually optimize your trading platform. Okay, so what you're likely to see is, and how you can add markets is, again, go to window, a new window, and then you're going to get a selection here. So what you can see is all the markets that are available to trade. So we've got FX majors, exotics, indices, futures, stock markets. Look at all the stock markets we can trade. We can trade these are single equity stocks. So we can trade Cisco Systems. We can trade eBay, Google, IBM, Qualcomm, huge Tesla, huge stocks. And they're not only US stocks, there's a whole range of different stocks as we go across the equity markets. FX crosses, energy markets like natural gas and oil, different metals. So these are gold, we've got copper as well, silver, palladium, cryptocurrencies as well, Bitcoin, Bitcoin Cash, Ethereum, Litecoin, so really a lot of exposure, guys, that we can gain here, and it's all going to develop our skill set trading different asset classes. It's a huge advantage to trading with such a range of portfolios. So what I'd like to do again is just to reiterate, new window, we go and we'll just choose something simple like Euro US dollar. So then on screen, this is what you're going to see. Effectively, when you log into all of your charts, you're going to see something similar like this, or perhaps you'd see a whole array of different markets like this in the shorter term. What you'll simply do is look to expand the market so it becomes full screen, because you're simply able to observe full price action. So just here in the top right hand corner, select that, and that will bring it full screen. Now again, here you can actually look to edit this or optimize the trading platform, because it's quite, it's not giving us too much information. It's all quite blurry. It's very difficult to read. How do we speculate and see where the strength is in the market? What we'll need to do is change what we're actually able to view here. Okay, so what we'll do is, first of all, before we change our properties, what I'd like to do is just to show you the different time frames here. What we'll first of all do is just consult this little area up here, again within our green rectangle. Okay, so that actually is our time frames. So we have our separate time frames, MN, which is month. That is our monthly trading. Our W1 is that each candlestick is 1 week. D1 is day, so each candlestick is 1 day. H4 is by 4 hour price action. H1 is by hourly, and then M30 each 30 minutes, M15 each 15 minutes, M5 and M1 5 minute and 1 minute charts respectively. Okay, so let's do that then. Let's just select this. What I'm going to do is select D1. We can see the changes. Now I can't really see what's happening here, so I'll move this, and just above our price charting, you can see we have bar charts. We can see we have candlesticks and line charts. I'll just click bar charts for now. And then again, we're just seeing this price action here because it doesn't really give us too much detail. So we'll just take away that for a moment. We are selecting daily price action. Let's optimize our trading platform. So I'll right click here on the chart and go to properties. And then what we'll look to do is just change some of our settings here. Now, it's all indicative, guys. You can, of course, choose something that suits you. So just for observation or for discussion, I'll actually choose something a little different that I'm used to here, just because it's personal preference, of course. What I would advise you is choose a preference that allows you to observe clearly what is happening in the markets. You don't want too many colors, similar colors, that you're not sure if it's a bullish or bearish day. You're not sure how the market is trading, or you can't see any of the price action. So make sure that you're conformative in your selections. So what we'll do is, first of all, change the background from black to white, and then the foreground from white to black. Okay, we'll change the grid slightly to just make it a little lighter so it's observed, but we can just see it in the background. And then we'll choose our bar ups. Now, effectively, our bar up and bar down is going to be our bullish candles. So what we'll do is we'll change our bar up to we'll leave it green potentially, and we'll choose the bull candle to black. So we'll just enter this now and see effectively what difference it has made. So quite bright. We'll zoom in on the price action again. So these are our candlesticks here. Again, you can see what I mean when I recommend to you guys that we want your personal preference to be conformative, because I can't really see what's happening here. It's quite bright. It's not giving me any signals at all. So let's go back into our selection. Again, right click on screen, scroll down to properties again. What we'll do is, well, we can see the bear candle is white. Now, let's change that to, of course, red. And we'll change the actual the graph as well. So we will, of course, bar down. Let's change that to black. So we have something very, very conformative there, okay? Something very conformative. Now, just for a change, potentially we will choose our, let me see, our bull candles. Let's just choose them a little different. So, well, potentially choose blue just for a change, and actually change then our bar up. This is just the outline of the candle to blue. Okay, so something a little different. We'll choose our line graph, which is some of the technical analysis just to black as well. Volumes in green, that's fine. Okay, so let's see how this interacts. Okay, so that's a little more conformative, isn't it? Now that's different to my general setting here. What I use is, of course, green and black, and that's just what I prefer to use in the markets. But of course, you can choose to change your settings. You can choose to remove the grid in the background. You can just see it lightly there. Sometimes I like to include it. But what this tells me is, well, this is the euro US dollar. This is the price action. This is how it's trading. And this is effectively a bit of a bounce, a bit of a bullish day today. So that's just how you can look to go in. Again, right click properties, play with these settings so you're comfortable with something. That's on the color scheme. You can click common, and again, you can show the ask line for the market, which is the best selling price. You can show the grid again. So effectively, you can take away that grid if you so wish. I'll just keep it for this chart and play with these settings to find something that's comfortable for you. Again, make sure that you're able to fully observe what's happening in the markets. I can't make that point strong enough, because you want to be able to properly analyze these markets and not put yourself at a disadvantage. So what I could actually do, just to reiterate that point, is change my bar diagrams to potentially a line graph, or potentially a real structured line graph there. That doesn't really give me any information, to be quite honest. It doesn't tell me what's happening each day, each time frame, and what the significance of the market is telling me in terms of the price action. You can see the disadvantage. So then when I go into this, well, I can see we have a downward trend, but it's simply this price here. Let's just zoom in. I'll change it again. You can see that this price, well, it doesn't really tell me what happened there with the price action here. So I'll just highlight this. Well, let me just change color with that. What actually happened during this time here? You know, was there a rejection to this, or am I looking to buy this because it looks to move to the upside? I'm not quite sure. Well, let's just provide more information to the trade by simply selecting our bullish candlestick, or our candlestick structure. Yes, that's effectively what I can see. More information. The market traded up and rejected these highs, and now we're just seeing a little bit of a bounce. So it does provide us with much more information, guys, again, with the candlestick structure. Again, of course, we discussed all of this in lesson 2, the preference of professional traders and retail traders alike, not to trade line graphs. We trade price action charts. Okay, so we want to see the candlestick price action. So let's move on then and actually go through some of these charts here. What I'll do, so this is again my preferred structure. You can choose your own. I prefer the green candles to be bullish days and the bearish candles to be red days. We can zoom out. So this is our overall chart. We can see this is the US dollar index. So that is the story then of the last year. We see a very, very structured trade to the downside over the long term. This is dollar weakness, guys. This is US dollar weakness. That is simply what this is telling us. Again, we see another move. Now, the story, if you consult Bloomberg or any of these news articles, the story of the last 2 weeks, guys, is that we have dollar strength, okay? Dollar strength across the board. And that's effectively, guys, there's nothing to it. That's what we see in this price action. Can you see that? That's what we see in this lift to the dollar. So we can trade this. We can look to buy the dollar in and around these levels and try and, hold it for some profit. That's all trading is. There are many different ways to trade, but when you break it down, that is simply how you can look to profit in these markets. So isn't that great that we can involve ourselves in saying, well, the dollar's been very weak for a long period. I wonder when the dollar is going to get stronger and what's going to happen. Then we see some news flow with FOMC there, or the president saying he wants a little strength in the dollar or something, and you see it start to bounce. This is effectively what you can do to position yourself in these markets to profit from all of this news flow you hear throughout the course of your week. Okay, so that's simply what's happening in the news. And then as we look to trade the markets as technical traders, perhaps we can zoom in and say, okay, this is the move that we're going to get involved in. Really nothing to it. We see 1, 2, 3, 4. If we forego this, 5, 6. So we see 7 days of strength in this market. So this market's clearly going up. Let's try and get involved in this market. Okay. So let's just zoom out then and consult more discussion on the MT4 trading platform. Okay. So the first thing I'd like to do is we'll just move across to our euro dollar again and zoom out. Well, what is this market? What is the euro dollar? It's simply the forex pair. It's simply the euro against the US dollar foreign exchange rate. And we can trade this, of course. Now, what I'd like to do is you can select this on your market watch, right click, go into specification, and any of these markets, specifically, it tells you what the market is. So don't be too afraid in terms of, well, I don't know what that market is. How can I trade this? I've never, I don't know. Let me choose a different market, copper. Well, I don't know what that market is. Why would I be trading copper? Well, simply go into it and it tells you everything you need to know. It's simply the copper market, the commodity copper. It tells you everything in terms of how it's priced. It floats, so it floats on free markets and traded on free markets. The contract size for a full one lot is going to be 1,000 units of copper. So it's effectively telling you how much risk you're taking. If you're going to trade a full one lot, it tells you it trades with full access. The margin is 0.5%. What type of orders that you can use in the market. What is the spread? What is the pip value? What sessions the market is open. So when you can trade this market. So all of these markets show their information simply by right clicking and going to specification. And there's a forex pair. It tells you, the profit calculation. It's of course pounds because we're trading pound against the Swiss franc. When this market is open, what the pip values are, what's the swap rate for different positions. So all the information is inclusive in there if you want information on any market that you're trading. Okay, then we'll move on to discussing the pip-ask spread. So let's just use this market we have in front. This is the sterling Swiss franc. Okay, so the sterling pound against the Swiss franc there in Switzerland. So let's just drag this on screen. What you can do is either right click, of course, or you can simply drag it like this, let go on screen, and it will populate your trading screen with the market in front. So this is the simple price. This is the movement of price here on the right hand side of this actual market. Okay, let's just highlight that and discuss. So this is obviously the movement. We've seen it trade up to this price now. But as this price here, this simply dictates where the price is at this level in time. And it just moves. You can see this little line is just moving as the market moves up and down. So if the market moves down, this price may be down here, and this black line will just follow and populate as the market moves. Okay. So that effectively is the price current of our pound Swiss. In terms of trading this asset, well, how is it priced in terms of if we're looking to buy or sell this market? Well, this is effectively our bid-ask spread. So we can see 1.3568 to 1.357. Okay, so there's a small discrepancy between the price that we can buy and sell the market at. And effectively, this was discussed there in lesson 3 there, you know, the bid and ask spread. These two figures are the quote prices for the price that we can buy a market at and effectively sell a market at as well. Okay, so there's nothing to it. We can simply use this to forecast, you know, the difference between the spread, of course, is going to be the small transactional cost. So if there's 4 pips, if there's 5 pips, we're going to be effectively trading very small pip exposure in terms of the transactional cost for that trade. So it's always good to know what you're trading, but it's all detailed here, guys. And what I'll actually do is discuss this in a little detail in terms of entering the market. So let's just put a hypothetical trade here. Now what I'd like to consult is our terminal here. And I'll just highlight this again in green here with a green circle so that you can see. It's just a simple toolbar function here. This little terminal here, you can simply select that and you can see it brings up the terminal below with our balance here. And again, I'll just drag this up so we can see. You can simply drag this up just a little to see. There we have it, guys. This is everything we look to get involved in the market. So here in our demo account, we have our balance, we have our equity, and again, we have our free margin. Okay, so we're not in any trades, so they're all the same. Of course, they're all the same. So let's just place a trade and we'll follow it through the course of this webinar, this trading workshop. So what I was discussing there just prior to showing you the terminal is, of course, the spread, the bid-ask spread. Now what you can do is consult just beside here, new order. We'll click that new order. It populates our screen with a trading order, okay? This is effectively nothing to it, guys. This is how we trade in the markets. So what we can do is choose the market. Okay, we have this market in front, and we'll leave as is, of course. Our volume. So what we'll do is trade a 0.01 lot. So can anyone remember? I'll just ask a question here to the group. Can anyone remember how much notional value that is in terms of trading size for this market? So remember, we're trading sterling pound against the Swiss franc. So how many pounds am I placing? What's the notional value of this trade size against the Swiss franc? Absolutely, and it is, of course, £1,000. So our 0.01 lot is £1,000 against the Swiss franc. So what I'd like to do is just simply trade this market here. We can see here that the market is in the short term just to the left hand side, moving up very, very swiftly, just in the very short term, just moving up. So I'll just simply like to buy this momentum, see how we can price this in. And what I can do is just observe the pip exposure or the bid-ask spread as well, just here. So it tells me, you know, it's literally telling me before I execute the order, well, what price am I looking to buy the market at? That's here. And what price am I looking to sell the market at? So I'll just highlight this in a little detail, albeit with some scribbles. So if you could just excuse the scribbles there. And what price am I looking to sell the market at? Again, I'll just use some scribbles here again. So effectively, 1.3576 is our sell price, and 1.3577 is our buy price. So let's just simply follow this trade, and we'll execute an order. Okay. So let's just buy this market with a 0.01 lot, and we're in. So we're in the market there. We can see that we have entered the market. We can see that the profit is actually at -20. So we're just below the market. It just spiked up there, and now we're actually looking to follow this momentum to the upside. So again, let's just see how this market continues to trade to the upside. Again, what we can do is just look to speculate and modify this order. So we can right click and modify. And let's say we put our stop loss just below these lows. So what price is that? It's going to be around the 1.352 level. So we'll just do this now. Stop loss 1.352, and our take profit maybe at 1.3599. So So there we have it. If we zoom in on the price action, we can see that the market just actually just spiked up and caught us into that trade. So that's fine. We can see the profit moving here. So effectively, we're only €1, sort of $1 and 35 in the minus as the market trades there. You can see it's just rejecting. So that's fine. We've just unfortunately placed that trade, but it's just picked up and caught us. So again, there was no analysis for this trade. It's simply to show you how you enter an order for the trade. So what we'll do is just exit the trade. What you can do is click our X there for an exit to the trade. So that's it. That's all there is to it in terms of entering a market and actually looking to trade. And you can see that literally just spiked up in the very short term and reversed. So that was actually a very big move that we caught. But you can see, look, no harm, no foul. That was, what was it, a $2 or $3 loser for something that moved quite just out of absolute luck. I traded that market and caught a very sharp move to the upside and downside reversal. But again, that is one reason why we look to trade these Forex markets. And again, I traded a 0.01 lot. So from what is potentially a huge move, I've actually just taken a $2 loser. So that is why we look to trade this small trade size. And again, look, there was no analysis to that trade. So a question really that brings me to is, well, which markets do we trade, Robert? How do we get involved in these markets? How do we use our technical analysis? And what do we look to trade? Well, of course, that's the learning experience that you have ahead of you. The question is, what opportunities are best suited to you and what markets are preferable? So again, what we can actually do is assess perhaps some of these markets that we're looking to trade. We've seen a big move in the pound. It was actually the sterling market that moved there. So as we move across these assets, we're going to consult 5-minute charts. We can see the sterling moved against the Swiss franc. It moved against the US dollar. So very interesting.